Welcome to our midweek Forex forecast. I'm Jay Norris. As always, we need to point out that trading Forex is a risky endeavor and not suitable for all investors. The charts you're going to be looking at are real-time market snapshots and may not be replicated going forward. I've written a couple of books by McGraw-Hill, which serve as the textbooks for our courses, and I'm also the Director of Education at www.tradingu.com. First market we're covering is the Australian US dollar. Aussie US dollar balanced up, as it were. Here you could see that all-important secondary pattern is still bullish. On the other hand, that the day-to-day pattern, what we're calling a number 3 pattern, essentially the higher the number, the longer term the pattern. So the day-to-day number 3 still down. You'd need a couple of closes above that orange line. So it's kind of flirting with it, really flirting with shifting it bullish. And you can see the shorter term, that micro, that would be really 1 day to 1 week, certainly higher also. So short term you're higher, intermediate term you're down. So you're kind of balanced up short term. Keep in mind, however, the longer term patterns are bullish. So you can see your primary still up too. So we're viewing Aussie as a bit of a counter trend market here, even though you definitely have the majority of the patterns higher. Not quite sure how to account for that long-term pattern of lower highs yet. Certainly the higher time frames are up because your longer-term weekly chart, you have a pretty bullish pattern still overall, one of higher lows. On the other hand, you're over a year now without having punched out a higher high, so we really kind of view this as a counter-trending market. So not as bullish as we would be. Still a great trading vehicle for sure. Shorter term, keeping an eye on this level right here. You could see you spiked over it, but you had a shooting star there, so it really needs to hold above that level. We're still considering that resistance. Given you're below it, we're counting that all-important day-to-day pattern, which is a reflection of day-to-day news. What you see is number 3 on the chart. We're still considering that lower. Next market, Euro US dollar. No doubt about it, in the Euro US dollar, no doubt about it, your higher time frames are still lower here. Take a look at the weekly, and you can really see it. Primary pattern down, secondary pattern down, day-to-day pattern up. However, not sure how bullish that day-to-day is not sure how that bullish day-to-day pattern is going to hold up in the face of the higher time frame patterns coming into play. Now you're right up against secondary pattern resistance. You can see it there right around 130. Also, you have a bearish trend line coming in there. That's a weekly chart, mind you. So overall, long-term picture still bearish. We're kind of licking our chops, looking at a potential sell setup in this area somewhere between here and 130, maybe right around 130. We'll have to see how that plays out. We see this rally as certainly heavier volume the last week or so, but overall it started as a low volume rally. We think more or less a short squeeze on a lot of the U.S. hedge funds who got caught short in there. They made the decision back in July that they were going to carry those shorts through August, and then they kind of got stuck on them going into September, and now they're covering, and you're seeing the price action that's creating. So we'll have to see. We think long term, back to that weekly, that this will prove an opportunity for us in setting up shorts. Certainly what we would need before we just jump in there, we need to see a slowdown in momentum. We need to see bearish behavior against that resistance. We're not advocating jumping right in. However, that's a area where we look for a sell setup, so to speak. Not a trigger yet. We need to see bearish behavior first, so we're targeting this area as a setup for now. Next market is the pound dollar. I like the pound dollar overall long term. However, we'd like to see a pullback in it. Your secondary pattern did shift higher. Just the other day, you shifted that secondary pattern higher. So bullish looking chart. What happens? You got a secondary shift in line with that day-to-day. Things starting to line up on the long side. It's around about that time that you get a nice correction to run some of those new longs out of there. We would look forward to that because we'd like to buy a dip in this market. Stay tuned. We've got a lot of time between now and the end of the year. I think there's going to be a lot of good trade ahead of us. And that's our MO, basically buying dips and uptrends, selling rallies and downtrends. You just saw the euro. We think that's one big downtrend long term. We've got an opportunity to sell a rally, So let's let that play out and see if it doesn't knock the pound down and give us a chance here, likewise, to buy a dip in an uptrend. Next market we'll take a look at would be the Kiwi. We're liking the Kiwi too. You had a nice breakout. Look at that. You punched out a higher high. Very healthy market. We love how it found support right there. We're big believers in the simple pattern recognition. Here's a simple pattern for you. That's what we call Mandelbrot's generator. Benny Mandelbrot created that. Is what he referred to as the base pattern in markets that, when replicated, creates the more complex patterns we see. That's a pretty simple pattern for us here. This, on the other hand, is another market we'd really like to see a dip in. We're definitely keeping an eye on it short term too. Next market we're looking at is dollar CAD. Dollar CAD really been off our radar. We had said some time ago, we kind of wrote this market off at the beginning of August. Nothing to do. Likewise, we had even said, well, maybe we approach it at the end of the quarter. I think realistically, end of the year, I don't see anything going on here. The problem with this for us is you're coming up on historic lows. Professional traders don't want to press markets on historic lows because you can easily see short covering rallies. Short covering rallies, they tend to be fast and hard and go a little bit longer than anyone thinks. So that's a danger. You don't want to press it on the downside. At the same time, you don't want to buy a market just because it's cheap. We need reasons to buy it. So, we think that potentially you get a test of 95 even down below. So dollar CAD really of no interest to us. The Chieftain, dollar chief. Now, here's an interesting market. Let's peel back to the daily. You're on potential support. Interesting pair because the primary's up, the secondary's up, and you're on support. Now, Johnny, that's what we look for: a change of direction, a shift in momentum in line with those two long-term patterns. Well, they may try to change the direction, but so far momentum is still down. So it's kind of an inviting-looking chart, inviting kind of like a piece of cheese in a trap for a mouse. We'll have to see. We'll definitely monitor it, but it's definitely on support, and that's of interest to us. And it closed. It looks like it closed around in the middle of the range. Maybe we give that a second look. But so far, momentum is still down pretty hard there. So we'll have to keep an eye on that. Hey, dollar yen. We'll take a look at that. This market really confuses me. I don't know what to make of this big rally right here. Primary pattern down, secondary pattern down. Not sure how to quantify that, but I can quantify this very simply. You do have a higher low in place, so that would be of some significance. However, momentum down sharply. It looks like this market wants to take that level out. You have a pretty good bullish seasonal on this market, but not for another month or so. So, dollar yen, kind of like dollar CAD, maybe we take a look at it at the end of the month, which is also the end of a quarter, too. But nothing to look at right now. U.S. stock market, still your alpha market, very influential market. Beautiful looking market there, right? Primary pattern up, secondary pattern up, day-to-day up. So that's one of the few markets out there that's really aligned on the upside. And when a market's aligned on the upside like that, you don't want to get in its way. Let me open it up so you can see shorter term. A lot of green candles in there, right? Look at the last 5 bars, 4 of them are green. So that's a market where short-term traders still making hay on the upside. Hey, my name's Jay Norris. Thank you so much for attending the midweek report. As I said, I'm the Director of Education at Trading University at trading-u.com. If you want to see what we're doing, go to our site, click on the Education tab, and you can see some of the free demos that we have in there. So we would look forward to seeing many of you again in there and meeting some of you for the first time also. Thank you so much, and we'll catch you for the weekend wrap-up.